forget the technicals, focus on the fundamentals. You want to be long this market, do you?
If I were to invest based on technicals, I want to be long this market short term. If I were to invest based on fundamentals over the next 12 to 18 months, I have slightly different conclusion. I think we want to be gradually de-risking the portfolios, because that's the big difference between now and February. Technicals may look the same, but fundamentals actually look quite different. So for example, as we were ramping up earlier in the year, we were talking about earnings growth picking up. And now what we're seeing, and what we've seen from some of the bellwether companies last week, is that we might be seeing peak earnings. We might be seeing peak margins play out. And if that's the case, then we have to be a little bit cautious going forward.
Are we seeing peak earnings growth, Troy, or peak earnings?
Yeah, we've seen peak earnings growth, but we have not seen peak earnings.
So drawing a distinction there, can you still be bullish this market?
100%. And the big difference between now and January, February is valuations are much lower, right? So markets are pricing in already a slowdown. Obviously, there's concern about slower growth next year and the potential for a recession in 2020. But look, this sell-off is mainly technically driven, and now you have an opportunity to get long assets that haven't been this cheap in quite some time. We agree that over 12 to 18 months from now, you probably want to be more defensive than you are a week or 2 weeks from now. But now would be a terrible time to be cutting risk into weakness.
Anastasia?
Well, I agree with that. That now would not be the time to sell as we're nearing the capitulation point. But that's the message exactly, is that gradually, as we think about 12 to 18 months, we want to be reducing risk when the market gives us opportunity.
Yes.
So for example, we want to make sure we have our core positions in place today, and any non-core cyclical positions, we definitely want to reduce on any rallies that we get, and maybe by selling calls in order to capitalize on that.
Chris, a lot of people are looking for stability here, and I'm wondering whether we've seen the capitulation, that explosion in put volume, a rush towards downside protection. Have we had it yet?
I think we've seen enough for some type of short-term relief. So I certainly agree with that point. What I'm a little bit more sanguine about is we haven't seen that capitulative stress or anxiety in the options market that's often present at good washouts. For example, over the last 2 weeks, we've had 4 days where put volume has spiked. We had 20 of those days at the 2015, 2016 low. So the bar here for us is a little bit higher than it was in January, February in terms of getting that good washout condition that you want to step in and buy stocks. Just don't think we're quite there yet.
Are you seeing a bid longer term for volatility, like we did say in 2011, 2015, that sort of suggests that there's a lot more pain around the corner?
Yeah, well, I think what the lesson is from both of those experiences is that when there's been technical damage, putting in a good tradable or durable low takes time. The bottoming process is just that. It's a process. So when we look at what this will play out as over the next number of months, a bounce here is certainly likely, but I would not be surprised if we retested or revisited lows in the first quarter of 2019.